So, welcome back, friends. I welcome you all in today's briefing session for the date 14th of April, Tuesday. My name is Anurag and I'm the Senior Client Success and Learning Manager at BN1 Capital. And today we're going to discuss the market structures and the important data events which are shaping new trading opportunities in today's market. So, without wasting any time, let's start today's session. Before we move ahead, those who are watching this for the first time, let me give them the correct structure of this briefing session. So, first, we're going to discuss all the technical things, like everything on the technical charts. Then, we take the second confirmation, or you can say we connect the dots with the macroeconomic developments, data which have already been released and how they have impacted, and which are the data which are still pending to be released, and we're going to put much emphasis on those data which are going to play a catalytic role in today's market symmetry. So first, we start this session by discussing the gold into the H4 time frame. So into the H4 time frame, as you can see that yesterday, uh, the week has been started with a gap down, and all of a sudden we have seen a spike into the prices toward the upside, and this high has been taken over here into the H4, right? But over here, if you focus this candle, right, on a this candle over here, if you see, I've marked this area with gray color and I marked this as an order block. And once it has been mitigated and we have seen a fall in prices. But thing is that the low is not taken, right? This is called the liquidity contraction, right? That means buyers are start when the prices reaches the lower levels after forming the dip, accumulation has been started, and that is the reason we have seen that the prices are going up. So the chances of a breakout is very promising, and soon we'll see that there will be a breakout. Now the next question is that in which direction we might think that uh, breakout is going to happen. So according to this scenario, if I focus on this blue line which I've drawn over here and this trend line, right? This is a ascending triangle formation, and if I see the candle formations, right, so majority of time I need to count the candle, and I need to see that in which specific part of this structure market have spent their majority of time. If it is towards the upside, so breakout is going to happen towards the upside. If it is towards the downside, so this is one simple observation which you can use, right? Or else you can use the Fibonacci retracement by connecting this high and this low. Okay. Third confirmation you can take from the RSI, right? So RSI will tell you that whether whatever uh, trend line, either the uptrend line or the downtrend line which we have drawn over here, right? Is it respecting by the market or not? So if it is respecting, prices tend to get reversal from the trend line, and at the same time, RSI is also into the overbought area or into the oversold area, right? So we'll take this confirmation. Like see over here, yesterday what happens? Prices went down, tested this trend line which I've drawn by connecting these two low points. When the prices reach this level, see my RSI also overbought, and then they have taken the reversal toward the upside. Now what happening right now, that prices went up and almost they have touched this trend line, right, which is also the starting of the fair value gap area, right, which I marked over here, right? This, I'm talking about this fair value gap. So they have tested it. My RSI is also overbought, and that is the reason I've given this projection for the price movement in gold towards the touch of this trend line, right? From this I've given two arrows, right? It is telling me that from here to here the correction is very promising, but at this time we need confirmation from the market. So we need to watch the behavior of the price, how the price are behaving at that this specific point, which is 4676.80, right? At the same time, we need to see the RSI also. When the prices are going down, RSI would be at below the 30, which is the oversold area. And if they are taking the reversal, right, taking a rebound from here, then taking buy would be very good. If they are continuing towards the downside, they continues prices continues to go downwards, then this would be the potential target area which I've marked over here, right? With two horizontal red lines, right? The starting of this area would be at 4561.55. So this would be a very good take profit area, and this is also the low point of this candle, right? Over here we have the fair value gap, the last candle. So this is also an order block for the SMC. Okay. And if you see the symmetry, right? The symmetry which I'm talking about, see this, then this and this. So it's a tilted head and shoulder formation, right? It this is not the rule of thumb that head and shoulder or any kind of market formation should be horizontal, right? They can be in any triangle, and you need to train your eyes to identify such kind of patterns which we have identified. And when this is tilted, the chances, although this is an inverse head and shoulder, so because it is tilted toward the right side, so whatever upside momentum will come after completion of this or the break of this trend line. Okay, let me draw the neckline over here, right? This neckline has been broken. See, prices have breaked it, retested it, and right now they are going up. So this momentum is not going to sustain for a very long period of time, right? Still, after seeing such a movement, and even I booked my loss also in gold because I've been expecting prices to go below. Still, I am very much biased toward the sell side, and I'm waiting for the prices to take the reversal. That would be the time I will create short side positions for myself, right? The reason why I am discussing my trading decisions, just to give you an idea, right? This is not in trading advice. This is just for giving you the right approach, right education, that how I am analyzing, how I am taking my stop losses, right? And stop losses are the part of this game, right? And that will tell you as a trader what is your attitude towards the market, right? How you take the stop losses. So yes, I booked the loss, right? Now still my biasness is towards the same side, although maybe I've taken the wrong entry, right? But yes, my biasness is still towards the sell side. Second thing, see this small swing points which have been formed, now the big one, and then again. So you need to identify the market structure, because they will tell you that what kind of trap is designing into the market. And because of this biasness, those who are trading on a smaller time frame, they are going to take the buy, they are going to take keep their stop losses below this low, or the next low, next swing point which is going to be made over here, right here. So this is again a inverse head and shoulder, right? And when you find this kind of inverse head and shoulder in a sideways market, the chances of or the success ratio of such kind of patterns, right, into the sideways market is not very reliable, right? So you have to take your decisions. Second thing, lot of resistance, right? This order block, if prices, suppose if prices get momentum toward the upside also, then again we have one order block sitting over here, right? Lot of people are right now following ICT and SMC, and that is the reason I used. I am not personally a fan of SMC, but when lot of people are taking their decisions because of the free education which they have uh, been served, right? Or induced into their mind of through Google, through free YouTube channels, right? So they are going to react, right? So this is the area where a lot of trader psyche would be triggered, right? To take the any kind of reversal from this area would create a sale, same like this over here, right? So those who have taken sell call, they are expecting prices to fall very big, but this doesn't happen, right? Why? Because they want you to keep taking stop sell side positions, and then lot of liquidity is being collected over here, right? Then what they will do again, they will create a sell. More people will take the sell side positions. Then what would happen? There will be a fake breakout towards the upside. Once the liquidity has been taken, then the real price will. The real price action or the real path of this specific asset classes is going to be very clear, right? So remember this thing. So this is for the goal that we have discussed. We are biased towards the sell side, right? The best potential area to take a sell call. Let this prices take a reversal from this red zone which I've identified, right? Once this has been taken, and over here, I'm giving you a rule of thumb. You need a green candle, right? and you need the very next candle to be red, and which successfully give you the close below the low of the previous green candle. If this kind of setup happens over here, that will be the time you need to initiate your short side positions into the gold. If this doesn't happen, then whatever downward momentum you're getting, right? How many points you are going to catch into it, just catch it and get out of the market, right? Don't stay or don't come into hope that because I have discussed that price is going to fall, right? I've told you that price is going to get reversal and lot of liquidity is being collected over here, right? Because of the short side positions, but this is called liquidity contraction, so the chances of a fake breakout towards the upside is there, and once it is done, stop losses have been hunted, then prices will get a reversal, and that will be the time you need to take the sell call, right? So for making good profit, you need to have a patience, and you know that this is the thesis which we have discussed, right? Let the market react accordingly. If the market is reacting in the same manner what we have discussed, that means our analysis are going correct. Right, let's two predictions of mine, right, or of yours be completed, right? Market, let the market respected on this two analysis. One, two times market have agreed to your analysis, then it's a confirmation that you have understood the market momentum in a right manner, and now you can take the trade. Now moving on to the next segment, that is the silver. So over here you can see that I've used the market profile for the daily time period, and see over here, right? Almost equal. So whenever you see the vertical volume charts, right? So this area which is having the highest volume over here, right, is going to act as a magnetic area, and prices might take a reversal. Now focus on this gray area. This is a imbalance into the candle, right? And this is called the institutional imbalance, and SMC people call it the fair value gap. Okay. Prices went into this fair value gap, then again they have gained the momentum toward the upside. Now again they have made the fair value gap with the last selling candle, right? So this is a kind of a very perfect setup, right? Let the prices come at this level. If they are taking the rebounds toward the upside, same kind of price behavior we will observe in gold also when this area is being tested into silver. So you can think of taking the buy call. But if there is strong candle toward the downside and prices breach this area, then chances of reversal toward the downside is going to happen, right? Second thing is that see this gray areas into the RSI, higher high formations. Over here, the red circles, over here, the gray circles. Higher high, lower high formations, which is a divergence, but it is not yet completed. It is under development, right? So let the price come down. Chances of a correction is very promising, right? So right now, taking buy call just by looking at this momentum is not going to work. Let the prices come down. If you've taken buy call, keep your stop losses somewhere here, right? High probability that prices will come down and hunt your stop losses, or otherwise you have to keep a very big stop loss, right? And chances of taking that stop loss is also very high. Let this divergence complete. Once it is completed, then we take the confirmation, and those who want that how to take the confirmation from divergence, comment confirmation or RSI into the comment section of the YouTube channel, and I am share you the link of a video which I made on how to trade the divergence correctly. Now the next segment, that is the US oil, and everything is being impacted because of the oil, right? So right now the chronology is like that. If there is less oil supply because of Strait of Hormuz, when less supply, prices will go up. If prices of oil goes up, inflation will go up. If inflation will go up, everything become costlier or expensive. That means inflation is rising. If inflation is rising, central banks can't cut interest rates. If they can't cut interest rates, bond yields are going to rise. If bond yields going to rise, then dollar is going to be get advantage of it, and dollar becomes stronger. And as you have seen that Yesterday we have seen fall into the dollar prices, but still the DXY is showing very good strength. And if dollar is getting strength, then gold and silver will go down, right? So this would be the symmetry. But yes, if the oil prices are going down, then the just the opposite scenario is going to happen. If oil prices go down, gold and silver prices will go up. Now let's discuss over here. I've used almost four indicators over here. Number one is my volume indicator, which is the tick volume, also called the synthetic volume. Then I've used the CCI 14. Then I've used the RSI 5 period. Now let's see that what all these indicators and this Bollinger Band is telling me. Monday, we have seen a gap up opening because of the failure of the peace talk, which is happened in Islamabad, right? There is no conclusion coming out after the meeting. Then the prices came down, right? After the gap up, this gap has been covered, right? See this gap over here. Exactly from this point, right? From this point over here, you can see that prices are taking the reversal, right? So let me just draw this line. So mark this area as a important demand zone area, right? We have seen that prices have reacted very positively from this zone. Okay. Now prices came at the green line, taken the reversal toward the upside, but the momentum is not that impressive, right? Let me remove this fractals. Now focus on this swing point, right? After this swing point, we have seen a continuous movement toward the downside into the prices. That means those who have taken sell positions, right? The sailors who enters from here, they are very strong. Why? Because they are keeping the prices below the high of this candle, right? Okay, almost see this high and this high, almost equal highs been there, right? So that means the sellers are quite strong. Now identify the sellers. Where are the sellers sitting? See these two candles. Buyers have tried, then failed because of the exhaustion in the very next candle, a red candle and a red candle. So what would be your potential resistance area? This, right? For SMC, this is order block, right? And for pure price action traders, it's very simple. Candles are telling me. So these are the footprints of the some big players who came into the sell side for crude oil. So till the time this has not been cleared, the whole symmetry or the sideways movement is not towards the buy side. So taking buy would be good. Ask yourself this question. No. Right. Now, if sellers have came, now buyers are from which specific point? The buyers are putting their strength, right? So we need to identify that specific reference area also. Now focus on this. Last two selling candles very strong, which have renewed itself. But all of a sudden something happens. This candle failed to go below the low of this candle. First sign of weakness into the sell side, right? All of a sudden in the very next candle, this is called the upthirst, right? All of a sudden we have seen that the prices have surged and given a very strong candle toward the upside. Very next candle successfully gives you the close above the high of this, the last sellers, right? So this would be your potential footprints of the buyers who came into the picture and they have kept their stop losses into this area, right? Now the whole game is playing between these two areas, right? This zone and this zone. Now we need to mark. Now let's take what SMC will see. Last selling candle, imbalance. Next candle, yes, fair value gap and order block. Take it as like this only, right? I'm not taking fair value gap because it has been mitigated. See this area, right? So fair value gap has been mitigated over here in this candle. And just after mitigation, we have seen a sudden spike towards the upside because SMC is very predictive, right? All the institutions or the big players of the market, they know that all the intelligent people who are following SMC and ICT, they have placed or taken their buy limit order from here after seeing this candle. Lot of people also hop on to this momentum, right, towards the upside, which is not that promising, right? Still, this big seller is so strong. And who is this seller? Those who have taken buy from here, they have seen that prices have faced difficulty going below above the previous swing point high, right? So they have dumped their all positions, right? Now see, if they have invested to make this candle to trigger your buying sentiments, how much points of movement they have taken? Almost 80, right? Now see, from here to here, how much points? Almost 140. So they are getting 1 is to 1.5 resto reward, right? Even more than that, 1 is to 1.75 something, right? Because 80 double is 160, and almost we are getting 140, 147 points of movement. So because at this point of time, they have started selling it and they have dumped all their positions, right? Now, nobody is towards the buy side. Only the SMC lovers are taking their entry toward the buy side. And if prices goes above this swing points over here, lot of other people also take the buy call, and it's very predictive that they are going to keep their stop losses either below the low of the current swing point or the previous swing point, or those who are very conservative, they are going to place their stop losses over here, right? So three stop losses areas, three liquidity areas of the SMC. So what is going to happen? I'm telling you to understand the trap, how the market designed the trap. And if you read the charts correctly, you doesn't require any school of thought. It's very simple. So prices will go up if rejection is happening from this area, right? Then high probability that you'll see again a downward movement, or otherwise this sideways movement will continue, and all of a sudden you'll see that prices will take the lower side liquidity, right? Now, when this whole hypothesis which we have discussed is going to invalidate, when prices successfully gives you a close about this area, right? Once this is clear, we have a clear highway till this high, which is at 96.60, right? And this is going to happen that any news related to dollar is going to come, right? Surprise the market, and we'll see that some news is coming from the state or Hormuz, or from Israel, or from Middle East, or from Iran, that they have shoot missiles, something like this, right? Which indirectly tells you that there will be supply disruption. If this kind of news came, we'll see a sudden spike into the candle. So we understand the chronology of the event. If same kind of chronology you identify into the market, price also depicting the same thing, without any thought, we can take the buy call, and we know that the buyers who have entered over here are quite aggressive, right? But why the chances is very less? Because see the Bollinger Band right now. So I use Bollinger Band just to see that how many number of people right now are participating into the market. If there are more number of people, so Bollinger Band will be higher, right? It will be expanding, right? And if it is squeezing, that means very less volatility is available. And see, right now the volatility is very low, right? And that is the reason you are seeing the flat bands, right? So no clear direction will come over here, right? See, this is called the liquidity swap game. This candle, high has been taken, low has been taken, right? After seeing this, those who have taken sell call, they have kept their stop losses. I'm talking about people who have traded in M1, M3, M5, right? We've been discussing this on a 15-minute time frame. Now, this low also has been taken, high also has been taken. This is a broadening wedge, right? Broadening wedge formation is happening. So that means this is not the right time. Yesterday, I've done the same mistake in gold, and I've taken the sell side position, right? Prices went up, hunt my stop losses, then again went into my target area, right? From my target area, again prices went up, right? Same kind of broadening wedge formation is there. So I've learned from my past. So that is not the right time to take the entry. I've given you these two important zones, right? This zone is one and this zone is one, right? Wait for the prices to reach this level, then think of whether you're going to engage into the market or not, right? Till the time, you need to engage with the market, but just through your observation. Now, moving on to the next segment, that is the Forex. So, I'm going to discuss only two pairs, right? Because we are short of time. So, I will take $1 pair and one any major pair, right? So, let's take the Euro USD right over here. So this is the Euro USD chart, right? Over here also we have seen the gap down opening, and all of a sudden the prices have spiked. Now we need to see that whether we have any data which is coming today for the euro or not, right? Because into the H1 time frame, if you see the upward movement is very promising, and if I need to see that why we have seen this kind of movement. So I need to identify the previous market structure, and it's very clear that this is a channel, right? So don't bother to draw the channel. Just take that from where the consolidation has been started. So this is the candle from the consolidation has been started. Let me draw the deviation channel, right? So from here to here, and I think over here I've taken the breakout, right? So I take this breakout candle and see what happens. So this is the deviation channel of two deviation, and see prices has been trading into this channel, which is the ascending channel. Given the breakout, taken the retest has been done, and then the prices have crossed this swing point, right? That is the time at which we need to take the buy call, right? Which we have missed the entry, right? So this happens in the Asian session. So right now, taking buy would be very dangerous because we have seen in gold and silver also. So wait right now. Now focus on this small sideways movement, right? So let me draw one more deviation channel. Just by taking this from here to here, everything has been started, and at this candle, right? See, prices try to give you the breakout, but this is a fake breakout, right? Before this candle also, if we draw our channel, right? So I think I will draw my channel till here. At this candle I have my breakout. I'll revise the channel to this candle. Now see, I need strength into this also. This means that buyers have put so much strength that they are not having that much strength for the next candle to make a very good or very impressive candle, right? They have lost all their strength in just pushing the prices from here to here, right? They have lost their strength, right? And right now what's happening, they are collecting, right? So it's a test is happening in the market, whether the retail traders or the other participants are also in favor of pushing the prices upwards or not, right? So if lot of buyers came, then this trend is going to sustain, and we'll see more swing points or higher high market structures like this. If they fail, then there will be a reversal into the prices toward the downside, right? And that will be the time for which you have to wait, so you can take the short side positions toward the downside once prices re-enters the channel. I'm talking about this major channel, right? So this mid band is going to be very important pivotal area, right? I marked this arrow also, right? This is the gap I'm talking about. So prices will come. If you're again seeing the rebound in the prices towards the upside, taking buy would be very good. If they break this area, then take the sell call. Now let's discuss the USD CHF on a daily time frame. So this is USD CHF. Over here, we have seen that, see this low over here, right? This high and this high. So let me draw this areas and resistance, and which is working very perfectly, and see this and this market structure. So whosoever tells you that patterns doesn't work, patterns always work. But trading on the basis of patterns in just isolation is not the correct thing, right? Now, after identifying, I'm not the only genius who have identified this pattern. Lot of geniuses are available, those who have identified this pattern, and this is the free knowledge which we have gained from the Google. Now, any sign of reversal from here will satisfy our ego that this pattern is going to be completed, and from here the next shoulder is going to be completed, right? And that is the confidence which market wants, which is the smart money wants, right? So when you take the buy, if lot of people are very confident and they have taken the buy, so their stop losses are here, and stop loss hunt would be there, right? So this is the right way to use the patterns, right? Patterns, prices, or the market makers design patterns to trap masses, right? It's very easy to prey them, right? If everybody is trading on a very different school of thought, so to hunt them it's very difficult, right? They want majority of people toward the buy side, so it's easy for them to hunt these stop losses, right? That is the harsh truth of the market. Nobody will tell you this thing openly, but for the last 10 years I have been seeing this into the market. I've lost a lot of money also, but once I have understood this, then I'm making consecutive profits, right? On a regular basis, right? Yes, stop losses are the parts, but that stop losses are very less. And once I understand this, right, and if you also understand this, you know that when to increase your risk and when to decrease your risk. So keep this into mind. So USD CHF daily, previous candle very big, right? This candle is not that impressive, and just we have entered the European session and still that candle is not that promising. That means they have put all their strength in pushing the prices downwards, and the chances that you'll see exhaustion into this candle is very high, right? So yes, we can take advantage of that exhaustion by keeping the buy. And if USD CHF will go in buy, Euro USD will go down. Both have the negative correlation, right? And same is the case for gold also. Now let's have a look on H1 time frame, because we are intraday traders. So see this price fall, right? Then again buyers have tried to go up, and then again now from here, see, there is some kind of break into the price action, right? We have one candle, and this is also called the three star in the south pattern, right? So we have low, the next candle tried to go below, failed, and this candle is also struggling to go below the low, right? So what happens? See RSI, we have a lower low already have been made, right? So chances of a divergence is there, buyers will come, right? So help the market to make the green candles, and once that is done, get out of the market. If market wants to hunt the stop losses, so all the divergence traders, after seeing the green candle or reversal, stop losses here, right? Those who are seeing the bigger time frame, for them also the head and shoulder has been completed, right? So it is the time to complete the right shoulder, so they also take the buy call. If market continues with this momentum and crosses this area, right, this pivotal area, and this is three lines are my volume weighted average, which is called the VWAP also, right? So if VWAP has been covered by a very strong green candle, then we think of taking or continuing with the upside momentum. Otherwise, stop loss hunt would be there. Okay. Now moving on to the next segment of the report, that is the indices. Okay. So for indices, we have seen this is the Wall Street 30, right? Yesterday we have seen the gap down, right? And again the prices are going back up, right? See this area right over here. So this is my analysis which I've written, and I marked this area on Friday. That is the last Friday. And I've given this 48577 would be the very potential area, and see this two green horizontal line, right? So this is a very important potential area, right? So from here you need to take this sell call. Now what majority of people do when I tell them that this is the zone, you have to take the sell call, as soon as prices enters this area, they just start taking the sell call. No, this is not the right thing. Let the market enter this. This is the area where buyers have to show their strength. Let the buyer show their strength, right? If they have strength, they will cross this area, right? Then our whole setup will be invalidated. But if they lost or exhaust all their strength, that is the sign for which we are waiting, right? This is the first sign, exhaustion into the buyers. Now let the sellers show their strength. That means green candles, whatever green candles have been made over here, they have been covered by the next bearish candle. Once this done, prices came back down below the low, right, of this area, which is the resistance area which I marked. That is the time you have to take the sell call, right? Don't jump over here, and sell limit orders are very dangerous, right? I have analyzed my 15,000 trades, right? And majority of time, 60 to 70% of the time, whenever I have taken the sell limit calls, they hit stop losses, because I've given my information to the market in advance, right? And this is the bad thing which I dislike about the SMC, because SMC give you the order blocks, fair value gaps and all, and they will tell you to that lot of limit orders have been waiting, so we also place the limit orders. This is not the right thing, right? Don't get trapped into this. Wait, so prices will reach this area, take the reversal, right? Taking the reversal, when the reversal is complete, take the sell call, keep your stop losses below this area, above this area, which is 49011, right? And if there is escalation in US and Iran, then the chances that they will be fall into the riskier asset is very promising, right? There are two sentiments of the market. It's not fear and greed. Fear and greed are the sentiments of humans, right? Market having two. Smart money is being run by lot of minds, right? So smart money is itself a separate entity, and they have two emotions. One is risk on, one is risk off. When the market risk on means risk is on, right? You can take riskier assets, you can take positions in riskier assets. What are riskier assets? Indices, stocks, right? These are riskier assets. When the sentiment is risk off, that means don't take risk, invest into safe haven currency, safe haven assets. Or it would be much better that if you invest into fixed income assets, which are the government bonds, US bonds, treasury. And that is the reason. Instead of investing into gold or silver, people tend to invest this into the US bond market because they are getting a guaranteed return. Okay. Because they get interest rates. But this is not the case for gold and other precious metals because they are non yielding assets, right? But yes, if there is clear declaration that there will be war is going to happen, right? Massive war, then in that case, nobody trusts the government also. In that case, people tend to invest into safe haven assets like gold and silver. Right now, this is not is the case, right? Still people believe into the bond market. So for this, you need to see the bond market auctions also, T-bill auctions also. And I've seen that majority of traders, right? Even 99% of the traders, they don't give too much focuses on the bond market, right? And they have the confidence that without seeing this, just by analyzing the chart, they will be very successful in the market. So market will tell you the truth, right? And lot of people already know their truth, that what happens to the market if you trade with very less knowledge. Okay, now the next section, that is the last segment of this report, is the BTC USD, right? So this is BTC USD into the daily time frame, right? This is the sideways market, right? So let me remove all this red line, and I have a clear sideways market. So it's better that I should draw a deviation channel over here, right? So let me draw the deviation channel. This would be the last candle, right, of the sell side. So let me this candle, red candle, right? So from this red candle, let me take this, right? Right, and this is the highest point which have been made by the market till now, right? Okay, so just stop it. Okay, now what happens? See, this has been respected, so it has been a confirmation that whatever channel I've drawn, the reference point which I've taken is correct, because market have respected it. Now this is the mid band. See the sideways consolidation, prices are taking rest. It's a breath catcher for the prices. Now again prices have spiked, and possibility of a upward movement is high. See, this trend line is also coming from the daily time frame, so it's a primary trend line, right, which is a downward trend line. And this is happening a time correction because prices are trading within the range of this candle. See, this whole price movement is within the range of this candle, which is a time correction. That means prices are taking a time correction because they want to kiss this trend line, right? They want to touch this trend line. So what should be our expectation from the market? Sluggish sideward movements toward the upside, right? And this intersection is very looking very promising, right? So maybe tomorrow, that is the Wednesday or Thursday, we might see that prices will touch this area. Once they touch this area, then we change our biasness. Till this touch is not been completed, we are towards the buy side, right? And because this is on a daily time frame, now we know that in a major time frame or in a daily time frame, which is the daddy time frame, things are going to go up. So what our expectation on a smaller time frame? Sell or buy? It's very clear, buy. Any dip, that is the right time to take the buy, because now our analysis or our biasness is in sync with the bigger time frame. Right now everything is in an everything is aligned, right? So keep this into mind, right? So that's all from my side related to the technical analysis. I hope 100% that whatever things I've discussed, right, if you don't understand it, watch it again. This is a recorded session, so those who are the premium clients, they are fortunate enough because they will get the recording sessions just after the close of these sessions. But those who are not the existing clients and they are watching me through YouTube, right? So yes, you have the YouTube. You can visit my channel. My channel name is My Star Mentor, right? So I have my Instagram ID also with the name My Mentor Anurag. You can ask your questions into the comment sections, right? And same is the case for the YouTube, and do follow and subscribe that also, because every day I used to make lot of informative content which help the traders, especially the retail traders, to preserve their capital. Okay, now the last segment of the report, that is the economic events for today. So let me share you my screen. So for economic event, I use the trading economics. I like it because lot of information has been given uh, on a single website, right? So this is the 14th of April, right? These are the data. So these are the early Tokyo session and Pacific session data, which already impacted the market. So it's no use of wasting time in discussing this thing. But just to give you the idea that this consumer confidence, this is a sentimental data, and this is very important. This came in negative, which is a negative sign for the currency. Business confidence, if business confidence is decreasing, less job creation is going to happen. Okay, less job creation, less spending, less profit, less GDP, less GDP, weaker currency. Okay, China, balance of trade. So these two data are very important. If something happens to China, it is going to impact Australia and New Zealand because they are the biggest trade partners, right? They buy goods from Australia, especially the mining goods. And if they are facing any turbulence, they are not going to buy. If they are not going to buy from Australia, again, it's a negative news. So in this financial world, everything is interrelated. You need to understand that, identify these strings, right? If you pull that string, which are the different economies which are going to be impacted, which are the sectors which are going to be impacted, right? And don't worry, we make it simple because we have the BMC premium community and our Telegram channel, on which in every 30 minutes we'll share the analysis of the news along with the interpretation and the use case, that how to apply that practically into your trading. Right now, see this 20-year GBP auction. Previous interest is 3.141 and right now it is 3.327, right? So it's a very good jump, right? Of almost 18 basis points, right? It's very huge. So on a 20-year basis, Japan is telling me that give me money for 20 years, I'm going to give you 3.32%, right? And this is a country which offers very less interest rates, right? 0.70%. So from the emerging markets, smart money, institutions, FIIs, foreign institutional investors, they are pulling their money. Everybody knows, a lot of people have made content also on it, but nobody telling us that where the money is going, right? Few of them have told them that money is flowing to the safe haven assets, and Japan is that country. And that is the reason you have seen that increase. And why foreign institutional investors are pulling their money from the emerging market, this is a clear indication that right now risk of sentiment is there. Nobody wants to invest into the riskier assets. India is an emerging market, Brazil is an emerging market, Taiwan is an emerging market, right? So they don't want to invest because they know something big is going to happen, big and dangerous and destructive. And we know that Strait of Hormuz is not getting sorted out, and soon it is going to impact the whole global economy, right? Including our pockets, right? We've been facing a lot of disturbance, especially into the energy crisis, and that is the reason they are taking withdrawals from such kind of markets like India and all, right? And they are diverting their investment into a safe haven currency, which is Japan, right? And that is this confirmation which we are getting. Okay, so I'm giving you the right way to connect the dots and understand that what exactly happening into the market. Okay, so if I've withdrawn, taken profit from my stock investments or indices investments, where I am diverting this, if you have this idea, you know that where the money is flowing, you just need to follow that money flow. This is called the smart money concepts. These are the exact smart money concept. So you know that if somebody have taken withdrawal from Brazil, they're going to sell their currency, right, to buy Japanese yen. So what will happen to Japanese yen? Japanese yen will have a demand, and as a result, USD JPY is not going to fall because JPY is in a demand. So JPY is going to get stronger. So trade JPY against other minor currencies like NZD JPY, CAD JPY, right? GBP JPY, Euro JPY. So this would be the very good pair because you will see this and you understand it. Whichever currency is getting weaker against the JPY, that is the country from where the smart money institutions, right, of that country are right now investing into the Japan. So you understand it that which countries, big name or big businessmen are right now transferring their money, right, or withdrawing and investing into the Japanese market. Hmm. See, why I am very much confirmed that there is something very big is going to happen in the upcoming months, right? So I'm very much sure. See this industrial production month on month. Previously, it was 4.3%, and right now it is negative. A country which is totally export oriented, their industrial production is not performing very good. And then two people are investing into that economy. Okay, so this is the thing, right? So you have to think that why this is happening. Yes, if lot of exports is being done, industrial production is good, economy is performing good. That is the reason they are investing more. They are just parking their money, right? Because they know something very big and turbulent is going to happen, right? So for the stock, for the people who invest into the stock market, be cautious because you're going to see more dips. Whether you're from India, Pakistan, Bangladesh, UAE, it doesn't matter. Even from US, you're going to face a more free fall into the prices. So that is the reason Wall Street 30 indices chances of a reversal would be there. Not now, but in the upcoming months. So stay cautious. Don't hold your long term buy positions, right? Anytime you face any kind of fear, as soon as you feel the fear, get out of the market. Now come to the data points which are still pending to be released. See over here, 5-year bonds, right? It's not been declared yet, right? But see gold production, 0.7%, now it's 12.8%. So gold production have been increased from South Africa, and this happened. This is the data from the Fab. That means there is huge supply into the market. So for gold, this supply dynamics reacts in a very different manner because South Africa understand that there will be war, right? And lot of gold from the Africa, I'm not talking about South Africa, went to the Middle East, right? And where they processed it, make the finished products, and the whole world buys from there, right? Including India. Now they understand this opportunity, and that is the reason from 0.7% to 12.8%. That means 12.1% of increase they have done in the gold production because they have identified the future opportunity, and that is the reason we have seen. Once their production is decreasing, that is the time you'll see very good rally coming into the gold, right? For this, we need some time, right? And current this news is telling us that there is excessive production, so there will be excessive supply also. If there is excessive supply, then prices is not going to give you very volatile movement. They will be very stabilized and will give you the sideways movement, right? So don't expect very huge movement into the gold prices. Now come to the US data, and this is the very important data. So NFIB Business Optimism Index, just take it as a sentimental data related to the business, what businesses are thinking, right? So this is a data above 100 is very good or 100 is very good, right? Even 98.8 is also very good. So they are very optimistic. If they are optimistic, this employment change weekly is going to get decreased because when business have confidence, production is going on, they need labor. If they need labor, so labor market data is going to improve, right? So employment change is going to be very less. Okay, now come to the PPI. If they are very optimistic, so they are going to increase their production. Now we need to see that what their purchase managers, right, they are telling that whether they see any kind of increase in the prices of raw materials or not, right? So this is the data which will tell us that whether the raw materials are going to be expensive or not, right? And if they think that war is going to happen, especially the US guys, so chances of whatever we have discussed that there will be war soon, that will be confirmed from this data. Now see, previously it was 0.7%, consensus of analyst is for 1.2%, and forecast is for 1.3%. Now let's have a look on this chart, right? I hope you can see this chart. Jan, so this is November, December, January, February, March. Continuously PPI is increasing. That means raw materials are going to be expensive. If raw materials are going to be expensive, high inflation. High inflation, no interest rate cut. No interest rate cut, bond yields rise. Bond yield rise, gold will not go up. Okay. So I've given you the crux for each and every data. You can take the same kind of interpretation which I've given you and try my best to give you the layman explanation for this. Now come to the next, which is the 7:30. We have discussed the Euro USD, ECB lane speech, SIPO lane speech, again lane speech. So these are the speeches which we need to have focus. Three things we have to focus: what they are telling us about the inflation, what they think that there will be if there is escalation into the Strait of Hormuz or US Iran issue, how they are going to cope up with the energy crisis with which the Euro group countries are facing, and what they are going to do in the monetary policy, right? What would be their strategy, right? If there is any kind of hints that there is high inflation, it's a hockey stone. If it's a hockey stone, no interest rate cut or maybe interest rate hikes, then again the bond yields will go up for the euro, and again it will put downward pressure on gold and silver. Okay. Now come to the next, which is very important, which is the 52-week bill auction, right? So majority of central banks tend to invest in such kind of fixed income assets. So 52-week bill auction, 3.485% is the previous one. Now see, this is very surprising. From Feb 2026, current continuously the bond yields are increasing, right? You can see US 52-week bill yields, right? So yields are increasing. So why people will invest in a non-yielding assets if they are getting very good interest rates, right? And in future also prices might go up, right? And they have taken the dip. You can see in the April they have taken the dip right now sideways. So as compared to the previous higher interest, if they buy this current auction, they are getting a very good interest rate, right? Hmm. Same is the case for the 6 week bill auction, but it is not that important. But yes, for intraday traders, it is important. Then we have lot of speeches from the Bank of England governor, right? Which is Bailey speech we have, then Goolsbee, then Barr, then Collin. Same ECB, inflation, interest rate, monetary policy. If you after watching this speech or listening to this speech, you heard lot of time they have used the word inflation, state of hormuz, US Iran conflict, energy crisis. It's a positive sign for the currency, bad sign for the dollar, right? And in the last, the most important, International Monetary Fund, World Bank spring meeting, then World Economic Outlook. These two events are very important, which we need to watch. So that's all for my side. I hope we have discussed it very beautifully that what happenings on a macroeconomic level and what is happening on a technical levels. Collecting all the information and processing it, we'll get a very good hypothesis which we have discussed, that what you need to do, what how and what are the expected reaction of the market, and if you see such kind of actions or reaction into the market, so you know that what should be your reaction to the action of the market. So stay ahead of the market by processing all the information, right? Take the reference whatever we have discussed. So I've done my best to do the value addition and to help you in preserving your capital. So that's all for my side. Have a great trading week and a day ahead. Those who are the existing client, if they want to connect to us, they can contact the relationship manager. And those who are not the existing client, they can connect us by becoming our client. right? So we will be there to discuss. If you have any open position, we'll discuss, we'll design the strategy to get out of your stuck positions, and how you can turn your stock positions into the profit. So there are a lot of strategies, and we have a team of CMT researchers with us, those who are going to help you in taking the right trading decisions. So that's all for my side. I heartily thank all of you for watching this briefing session, and do comment what's your opinion after watching this. We have tried our best to give you the uh, right information in a very layman language, so a very newbie can also understand. And that is our goal, right? So that's all from my side. I thank you. I request all of you to kindly leave the Zoom meet room.